everyone, and welcome to another episode of the Emerging Markets Entrepreneur. Please welcome my co-host Sid Wahi and a very special guest today, Carl Watson. Carl is was a former management consultant with Delta Partners until he decided to start his own business, Yoco, a payment solutions provider in Africa, and they've scaled the company very successfully. And he wants to share now his wisdom around how to bounce back from the COVID-19 situation with all of you guys. Welcome to the show, Carl.
Oh, thank you. It's good to be here.
So, Carl, before we get started, can you tell us a little bit about Yoco and what the thinking was behind starting the company?
Sure, yeah. Yoco is a South Africa-based payments platform focused on small businesses. We help small businesses accept payments in person, online, and also run their business through a suite of software tools that help them run their point of sale, their inventory, and also more recently, providing them with working capital solutions as well, so that they can grow. Currently, we serve about 90,000 small businesses across South Africa. We launched the business almost 5 years ago, so the growth has been very fast. But the pain in the market is also very big. So we're very much a result of the gap that exists in the market, and that's what we've been solving for since the beginning.
Great. So you mentioned the gap in the market. How did you uncover this opportunity? And for our viewers, you're originally from Lebanon. So how did South Africa come up on the map? And just tell us a little bit about how that happened.
Yeah, sure. So my journey, career-wise at least, started in Dubai. So I was an investment banker at Citibank, where I ended up focusing quite a bit on telecoms banking, which I found super interesting. But after a year, I realized I needed to, spend time in a role that was a bit more hands-on, a bit broader. So I moved into management consulting. At the time, it was a startup consulting company called Delta Partners, which was exclusively focused on telecoms, Middle East, Africa. And I was employee number 10. And that was a really great growth story because, the company grew a lot. We when I left in 2012, we were about 250 consultants. So, there was really a lot of expansion and lots of opportunity to grow. But while I was at Delta Partners, we opened an office in Johannesburg to support the Africa telcos. And in the Johannesburg office, I met with Katlego, who's now my co-founder. He was also at Delta Partners, and together we spent time on a couple of projects and became good friends. We decided then and there, with a few years later, we would quit and start a business. That's essentially what happened. A few years later, after continuing to do some really exciting work in the telecoms landscape across Middle East and Africa, realized that we wanted to do something more meaningful and potentially start something ourselves. Cape Town itself was an attractive place because we felt like there was a nascent tech ecosystem. We were also quite inspired by just the creativity in the city and thought, let's give it a try. So the two of us quit and moved to Cape Town, but we didn't have a plan. We didn't have the business, the idea wasn't there yet. But we kind of knew we wanted to do some good. And then, two of our other now co-founders joined us as well on the journey. We were at similar stages of our careers. Bradley and Lungisa, Lungisa had just exited his startup, and Bradley was just coming out of Rocket Internet, and we all came together. Each had different skill set, and we're looking at different options. So we didn't have the idea for Yoco immediately. We started off looking at multiple different possible avenues, ranging from some small scale things all the way to the opportunity to do something large and meaningful with Yoco. But yeah, so I mean, and really I think the bug bit us when we did a bit of research on the payments market in South Africa and realized that there's a really large gap when it comes to accepting money. So a lot of people have cards in South Africa. From an emerging market standards, it's one of the highest penetrated markets in the world. From a card, everyone has 70% of people have cards. But from an acceptance standpoint, that was pretty different. So there was under 10% acceptance among SMEs, and that was, and it's a big market. There's about 5 million odd SMEs in South Africa. So we started to get a little deeper to figure out what the problem was, and we got hooked from there.
And actually, how did the name come up, Yoco? I mean, I know it from the start, but I actually never asked that question.
Well, there's multiple stories, but I think let's go for the short version. The short version is it means your commerce, and yeah, I mean, for us, it's all about the entrepreneur. It's about being it's about having a really personal experience with our brand. So that's how we've made sense of it. But it didn't start like that. It started just as Yoco. It sounded cool.
All right, fair enough. Cool. And how has Yoco been impacted now by this crisis? What is sort of your measures that you've taken? What's the impact, and what's your outlook?
Yeah, sure. I think like many other businesses, we got hit pretty hard. So I think the pandemic and the lockdown was really a do or die for many businesses, and we were no exception. I think it really tested our ability to shift gears and deal with multiple crises without, letting down our customers and without running out of money. I'd probably say, if I would like to draw you a timeline, I mean, I'll draw the timeline in hindsight. I think maybe, there were three key components to our reaction to the crisis and how we've dealt with it. And I think the first one is how, as a team, we worked together and how we collaborated. So I mean, Yoco, despite being a tech company, transitioning to remote work and learning how to collaborate on key projects to help our merchants throughout this period was extremely difficult. And I think for many companies who were not remote first or who were not fully remote, and we needed to do that like super fast. So you had the economic impact of COVID, but you had to solve for that remotely, which was very hard. And we're not a small company, right? So we really needed to reevaluate our systems, how we ideate, how we communicate with each other, and ensuring that all of those systems could serve the business, right, in a very simple and in a reliable way. So the choice. I mean, I'm happy to go deeper into that a bit later, but I think those were some really difficult, really important choices that we had to make. That I think firstly, let's make sure that we can work, right, and that was the first real priority. The next priority is how do we help our customers during this time. And as lockdown was very strict, and most of our customers, well, pretty much all our customers were using us 95% for in-person payments. And most businesses couldn't trade during the period, and therefore they needed to find different ways to trade. Otherwise, they will run out of money, and it'll be a complete disaster. So and this is probably where the most exciting things came out, right, from within the company, despite the challenges, is that we were able to, even though we were remote, we were able to very quickly conceptualize, to test, and to launch a suite of payment solutions that catered to the period, right? So mainly remote payment solutions online. And those were on the roadmap, but they were a deviation in terms of the priority. And those, they did exist, but we had to bring them back and launch them in a different way than we planned to before, and really accelerate those. But luckily, those launches were successful, and there's been really great take up, and our customers have benefited from having the access to these types of solutions. So ability to send a payment link via WhatsApp to collect money instead of having to tap the client's card, the ability to accept money on your website via a WooCommerce integration, the ability to buy gift vouchers or to promote gift vouchers for your customers. And what we've realized as well during that period is people didn't have most people who were trading in person didn't have an online presence, and therefore potentially needed a place to get discovered. So we created a website called sportsmall.co.za, and on that website we've created listings for businesses across all the cities in South Africa, and we made it possible for people to buy gift vouchers from those merchants and to access their websites. And that's been super helpful. There's about 2,000 businesses on it at the moment, and it's proving very helpful for them. And so there's the product stuff, but then on top of that, there's all of the more I guess non-product related areas of support that we embarked on. So we called under kind of an umbrella of Support Small, we launched virtual meetups that were previously used to happen locally in different cities. We launched virtual meetups almost immediately, and now on a weekly basis you've got hundreds of SMEs that are tuning into our virtual meetups, and we've been able to maintain that level of collaboration even online, which has been really cool. We've launched a whole bunch of content programs that enabled and playbooks and toolkits that helped our merchants navigate the crisis. So how to market my business online, how do I actually deal with some of the remote aspects of working, how do I manage my finances, etc. So that was another.
You did a lot for your SME client base.
Yeah, absolutely. I mean, because that really, the way we see it is if they don't grow, our mission is really to enable them to thrive, and really that's the core of what we do. And but I think very important as well, linked to that, which is probably the third piece of the response, is the how do we sustain the business? Because Yoco is not a profitable company, right? Yoco is still a loss-making company, like many other early-stage companies out there, and that's been a very normal thing to be before a crisis like this. So how do we deal with that? Because all of a sudden your revenues are down 85%. And really what we did there is we took after we've dealt with like the how do we work and how do we make sure that our merchants can keep transacting, we took a step back and thought, okay, like what is this, like at a high level, like what is going to happen over the next while? And we predicted a very deep dip, and then we predicted a very slow recovery. And the idea was to build different scenarios to almost to almost prepare ourselves financially for that dip and for that very slow recovery. And we had some cash in the bank, luckily, not enough to sustain us completely, but it was enough at least to if we were to change where that those funds were being allocated and rather focus them on cash preservation and on extending our cash runway, then we could potentially go quite a few months without needing to raise any additional money. And we did it in a very systematic way. We did it using we did it by first analyzing the environment, and then we amended the strategy for the year because the strategy changed. Focused a lot less on aggressive growth, which was previously our mantra, and focused more on innovating for our merchants, preserving cash, growing within the base, retention, all of these things. And that was I think a systematic process, which and then when that something like that happens and you have to change your strategy, you have to also look at the structure of the company. So structure follows strategy, and therefore as painful as it was, and it's something we were all dreading, but the company just simply did not need and could not sustain the same team that it did before. And we had to unfortunately make the challenging decision based on the revised structure, so very objectively thinking, okay, which roles were actually no longer essential to the business. and on that basis, right, resulted in a structure that had fewer people, and that was one element, which obviously is an important element of the cost saving strategy that we had, but it was done in a very objective way, and then we communicated in a very transparent way with everyone, proactive, everyone was involved, and yeah, early on we actually did the difficult decision to reduce the team size. Yeah, I mean, happy to chat deeper on that, but that was an essential part of keeping the business afloat. Also reduced salaries across the board, and cut down on most expenses, which has now given us the ability to sustain the business much longer term, and we've prepared for the worst, and luckily the recovery has actually been a lot better than expected, but still we wouldn't have done anything differently. Yeah, I think the philosophy remains pretty similar, right? So I think we're very much very big fans of the Netflix philosophy of managing through freedom and responsibility, and that was for us quite an important guide as we conducted our the way we do business. But I think one thing that I didn't mention, which was probably the most important thing, was that we had a pretty well defined set of core values and behaviors, and you define those usually on good days, and you don't really know how they're going to show up in your company stage. And like, if I could credit one single thing when looking back, it's that the culture saved this company. The culture really came to the fore, and that's when that your values truly represent you. So we've got 4 very well defined core values. One of them is making space to explore. The second one is keeping it simple. The third is staying connected, and the fourth is master your craft. And that's really how we think about adding value to our customers. And as soon as those are 4 values, and we've got 4 core leadership principles that also guide us in how we work, and those have come together in such a way, and we of course reinforce them, right, in our all hands, etc. But the way that these things just became internal compasses for everyone, right, whether they were impacted very negatively by the crisis or not, they've just used this as a compass for survival, right? A compass for keeping focused, for productivity, and that's probably our biggest takeout, right? Is that without that, and without us really having immersed those into the team, it would have been impossible, because we wouldn't have had a language, right, to express how Yoco responds to things. Because I think ultimately you can all these things that I'm talking about, they need to be put into practice. And those principles, right, and those things, that they make sense, but to execute them, you actually need to embody them, and you need to do them your own way. You can't just follow the way this company did it and that company did it. And I think we did it our own way, and that was absolutely essential. Now, there were some core principles that we used during this period, right? And one of them was to over communicate, is to be radically transparent. Like, our team had a real-time view of the company's finances. We were super open. Like, we were not keeping anything hidden. We were just super open, because we knew that everyone needed to know, right, what was actually going on, and that helped us a lot, right? At the same time, like, there was just this over communication of things, like how, like, instead of having at the time, our all hands used to be every 2 weeks. We started having a weekly full all hands, and then 2 more times in a week we used to have a check-in with the whole team. And during that check-in, we started off with the values, okay? And everyone talks about a story, right, about how the values has helped them. And it was just amazing to see how these stories, and it's continuing now, how the team is actually able to describe how the values have actually supported them during this period, and it's remarkable to see. So I think every period needed its own cadence, and I think at the beginning there was just this shock, and we needed everyone to get together like 3 times a week, and that's really how it happened. And as a management team, we would get together instead of once per week, twice per week, all of us. And it's that like frequency, I think, that got everyone more comfortable. And then obviously from there, things got a bit more normalized. So some people got more comfortable. Some people, we could move a bit more asynchronous, and now we've become a lot more asynchronous as well in terms of how we work. But I think it was about over communication. It was about being super clear with everyone about how we're seeing things, mapping out the environment for them, sharing scenarios for how things are gonna how we think things are gonna unfold. Crying in front of them. There were many tears during the restructuring. Like, it was very hard. People just needed to feel like they were connected, and I think that's the most important thing. Luckily, we've got a team of predominantly introverts and engineers, and those people found a productivity surge during their during the lockdown, which I thought was, yeah. Whereas some people, extroverts, including myself actually, had a pretty hard time at the beginning, and needed to feel connected, needed to feel, and needed to remove ego out of the equation, and to remember that like, this is, we're all in this together. And you just gotta become more patient. You just gotta. There was just too many things.
So what do you think now, given the whole changes that Yoco went through, is going to stay for good? And where do you see the biggest opportunity of all the changes that you've described sort of in the future?
I think that if I look at Yoco hasn't gone back to the office. Okay, so we're so far we're asking people to stay working remotely, and we expect that to continue for a long time. And we are actually we're exploring internally how we can become a remote first company. So there were so many things about this that were net positives, that we really want to figure out how we can make this a more permanent situation. So we're undergoing currently exploration internally, and there's quite a few people in the team involved to figure out how we can become a remote first company, which has its own kind of definition. So I guess that's quite a physical implication of how we do that. I think that we learned a whole bunch of things, right? So I think on the one, like, we're now targeting to break even as a company. We were able to raise small bridge from existing investors, which was kind of, we just extended around from last year, which was good. But the way we look at costs, the way we look at spend, and even the way we look at people's time has just become a lot smarter, because you have to, right? Like, we just become a lot more sophisticated in how you look at segmentation, how you look at digital media, how you look at and focus within your product and engineering team. So these are all really useful things that only people who have been through crises can really say, right? That can really experience. And you become an adult all of a sudden. You become a lot more sophisticated. I guess other things that have is outlook and how we think about the future. So we've come to embrace uncertainty. It was something we used to be very, we used to really we obviously used to, there was, like, it's a cliche, right, that we need to embrace uncertainty, but we were very comfortable in previous days optimizing for a single outcome. And because most things didn't change that much, but right now we cannot, right? We have to have multiple outcomes in our planning, and we need to also focus on, instead of building for specific features, for example, or specific things, we rather focus on building for capability. and optionality, which can then unlock things in a more agile way. And all of these principles are just making us a much more capable, much more, and also other things like, for example, meetings versus having, asynchronous collaboration. Getting good at asynchronous, I think, is a super, valuable tool that you can, because it saves you a ton of time. People in multiple time zones can collaborate. People, who have different body clocks. All of this stuff becomes a lot easier, and then you can hire people from other countries. You can, do a whole bunch of things. So, worth mentioning as well, we hired a senior person in who came from a pretty big tech company in the UK, and she's working for us now, and she's living in the UK. Like, that would have never been possible before, and now all of a sudden we've got access to somebody who would have never been able to hire in South Africa. So there's lots of positives that came out of it. Yeah, so I think one thing that worth mentioning is early on we published once we started the lockdown. So for those who maybe aren't in South Africa, the lockdown started off being very pretty strict, and we were down 85% or so. So we were at 15% of pre-COVID for those merchants that existed pre-COVID, and those and we were at about 15%. And then it went slightly up to 20% a few weeks later, but we were still, part of that like full lockdown. And that lockdown was, at first, I think everyone thought that it'll be a 3-week lockdown, then we lift, and that's it. But then, I think everyone realized that wasn't going to be the case. So we moved from lockdown L5 into lockdown L4, and we knew there was going to be a 3-2-1. So lockdown L4 saw a few sectors reopen, and curfew reduced by a small amount, and whatever. And that saw and then when we saw that was going to happen, we realized, okay, this is going to be a long recovery, and we need to have a conversation about this recovery at a national level, so that people can know where they stand, and government can know how small businesses are doing, and the media can also report on it. So we decided to publish a real-time monitor, which indexed transactions against pre-COVID on a daily basis per province and per industry. So
Great initiative, Carl.
Thanks. And we published that live, and it's been life-changing this is radical transparency, and it was life-changing for businesses, because they immediately knew where they stood. So if I'm a retailer in Northern Cape, I know how my peers are doing, and I know that I'm supposed to be higher, right? Mm-hmm. So I ask questions, which is really fascinating. And so maybe just to so lockdown level 4, where we were at so it went up from 15% in L5 to 45%. So very meaningful jump, because that's when actually most shops and everything reopen. Lockdown level 3, saw an even greater opening. I'm actually not sure exactly what the big driver was for lockdown level 3 opening, but moved up from 45% to 55%. And then we moved into lockdown level 3 advanced. And level 3 advanced saw restaurants reopen partially, saw the beauty and hairdressers and a lot of the fitness and all that stuff reopen, which meant that, and alcohol reopening. All this stuff meant that there was a kind of a renewed activity, and we lockdown level 3, we went up to over 70%, which was really great. Unfortunately, when that at the same time, South Africa was corona cases were peaking, and when that, because of that, government decided to reinstate the alcohol ban and the curfew, which meant that we went back from 72% to roughly about 60%. So very sad to see businesses having to scale back. when they were making such progress. But I think we expected things to be volatile, and that's just what it is, right? It's not at all a perfect situation. And what's interesting is when you overlay that over by province, right? For instance, so by province, you saw some provinces, mainly the rural area provinces that didn't necessarily have many corona cases, were actually doing even better than pre-COVID, which was amazing. And then you'll see provinces that were hard hit, like Western Cape, for example, which was lagging behind everyone else because very fairly densely populated, also not like very like a lot of fear about corona, fewer tourists, hospitality centric economy, and all those things didn't play in its favor. So yeah, that's been fascinating to see. And I mean, and that's mainly like existing merchants, right, who were previously with us. We also added quite a few merchants. So on average, we're adding about 3,500 merchants per month, even during Corona. And what we found is that during March and April, there were merchants who signed up thinking that, this was maybe going to be an okay time for them to transact. And we saw that cohort performed really badly. But then starting June and May, the merchants who had actually signed up were doing amazingly, right? Actually even better than the guys who were with us pre-COVID. And I think that's because a lot of businesses now are shifting away from cash. So our data is very is only reports card data. So it's not a super accurate picture, but you can still derive a lot of things. And what we found is that on a per merchant basis, being at 72% or so of pre-COVID meant that we're starting to see, despite all these sectors closing and no tourists, etc., the fact that we're already at these levels means that there is a meaningful cash to card migration. We're doing a lot of research on that at the moment. That's hopefully a very positive outcome of the crisis.
Carl, thank you so much for your time. It was a fantastic conversation, and thanks so much for your candid answers. And I'm sure you'll inspire future entrepreneurs wanting to break away from the shackles of corporate confinement and do it on their own.
Cool. No, thanks for the questions and thanks for the time.
Yeah, thank you also from my side, Carl. I've just checked the small business turnover index that you've mentioned. It's at 54% right now. So let's hope that this index improves quickly and that we can all come back stronger from this crisis and go back to a sort of pre-COVID at least activity.
Yeah, I think we can get there. I think just like load shedding, bad weather, stuff like that, doesn't help. But I think we can get there. I think they're very resilient, the entrepreneurs in South Africa.